You paid your premium every single month. You never missed a payment. Then you got sick, you used your insurance, and you still owed $3,000. Your insurance company did not cheat you. What happened was completely legal. It was built into your policy from day one. You just were never told how it works. And that is the exact problem this video fixes, right now. Health insurance is one of the most expensive things in your budget. Most people pay it every month and hope they never have to think about it. But hope is not a strategy, because the moment you actually need to use it, the rules matter enormously. By the end of this video, you will know exactly what every term in your health insurance policy actually means in dollars. You will know why your insurance can legally cover almost nothing on your first few claims, and you will know the one number that sets your absolute financial limit. This is not a textbook definition session. Every concept gets a real dollar example. Let's go. Your premium is the amount you pay every month just to keep your insurance active, whether you see a doctor or not, whether you get sick or not. Think of it like a gym membership. You pay it monthly. That fee does not give you free access to every service. It just gets you through the front door. A typical individual health insurance premium in the United States is around $400 to $600 per month. If you get coverage through your employer, they often pay part of it, but you are still paying a portion every paycheck whether you realize it or not. Here is something most people get wrong about premiums. A lower premium almost always means higher costs when you actually use the insurance. A plan with a $300 monthly premium might seem cheaper than one at $500, but the $300 plan might have a $6,000 deductible. That is the trade: lower monthly cost, higher cost when something goes wrong. We will come back to this. The deductible is the wall between you and your insurance actually paying for anything. It is the amount you must pay out of your own pocket before your insurance company starts covering your medical bills. Say your deductible is $3,000. You visit the doctor. You have a minor surgery. The bill comes to $1,500. Your insurance pays zero. You pay the full $1,500 because you have not yet hit your deductible. Think of it like an excess on your car insurance or a deductible on your home insurance. You absorb the first chunk of costs. The insurer picks up after that. In the U.S., the average deductible for an individual plan is around $1,500 to $3,000 per year. In the UK, the equivalent concept in private health insurance is called an excess. It works the same way. The key point is this: if you are relatively healthy and never hit your deductible, you are paying premiums every single month and getting almost nothing back from the insurance company. That is not fraud. That is how the product is designed. Now imagine you have hit your deductible. You have paid your $3,000. Does insurance cover everything from here? Not quite. This is where copays and coinsurance come in. They are the cost sharing that continues even after your deductible is met. A copay is a flat fee. You pay $30 to see your primary care doctor. You pay $50 for a specialist, fixed amount, every time. Coinsurance is a percentage split. Your plan might say 80%/20%. Your insurer covers 80. You cover 20. So you have a procedure that costs $2,000 after your deductible. Your 20% is $400 out of your pocket, right now. Think of it like splitting a restaurant bill. The insurer agreed to pay their share, but your share is still real money. Here is the number that most people with health insurance have never looked up: your out-of-pocket maximum. This is the absolute most you will ever pay in a single year before your insurance covers 100% of covered costs. Once you hit this ceiling, your insurance pays everything. No more copays, no more coinsurance, just coverage. In the U.S., the out-of-pocket maximum for an individual plan is capped by law at around $9,450 per year under the Affordable Care Act. That number matters enormously if you face a serious diagnosis, cancer treatment, a major surgery, a hospitalization. Without insurance, you could face bills of $200,000 or more. Your out-of-pocket maximum caps your personal exposure at under $10,000. That is the actual function of health insurance, not routine doctor visits, protection against financial catastrophe. Your insurance company has negotiated discounts with specific doctors, hospitals, and clinics. These are called in-network providers. When you see an in-network provider, your insurance applies, your deductible counts, your coinsurance kicks in. The whole system works as designed. When you go out of network, everything changes. Your insurer may cover far less, sometimes nothing at all, and the full hospital rate applies instead of the negotiated rate. Here is the trap. You go to an in-network hospital, but the surgeon who operates on you works for a separate out-of-network group. You never chose them. You never knew. This is called surprise billing. In the U.S., federal law now offers some protection against this, but it still happens in edge cases, and it can still cost you thousands. Before any non-emergency procedure, always ask, is this facility in network? Is every provider who will treat me in network? Get the answer in writing if you can. There are 3 mistakes that cost people real money every single year, and they are completely avoidable. Mistake 1. Choosing a plan based on the lowest premium. This looks smart on paper. It almost never is in practice. A plan with a $250 monthly premium and a $7,000 deductible will cost you more than $9,000 before insurance covers a single significant claim. A plan with a $450 monthly premium and a $1,500 deductible gets you real coverage much faster. Do the full math, not just the monthly number. Mistake 2. Not knowing your out-of-pocket maximum before a major procedure. If you do not know this number, you cannot plan financially. Look it up today, not when you are sitting in a hospital gown. Mistake 3. Assuming your doctor is in network without checking. Doctors leave networks. They change employers. They join new groups. The network list from last year may already be outdated. Call your insurance company directly before any appointment. Confirm the provider is in network right now. That one call has saved people hundreds of dollars. If this video helped you understand your health insurance better, subscribe right now. We break down a new insurance topic every single week in plain English. Next week, we are covering term life versus whole life insurance. Which one is actually worth your money, and which one the industry profits most from selling you. If you have ever been told you need whole life insurance, you especially cannot miss that video. It will change how you see that conversation entirely. Before we wrap up, this video is for educational purposes only and is not financial or insurance advice. Every insurance policy is different. Always read your own policy documents and speak with a licensed insurance professional before making any decisions.